Hey everyone, Karan here from Life Accounting, where we help you save on taxes and increase your wealth. And today, I'm going to help you avoid costly mistakes when you file your tax return this year. Watching this video will help you prepare for tax season, pay the least amount of taxes possible, and keep your return or refund from being delayed. Let's get right into it. So the first mistake on the list is not being prepared. Look, if you've ever been unorganized during tax season, you know how frustrating and draining it is to try and catch up. And not being prepared is the number one mistake on my list because making this mistake causes a domino effect that leads to many other mistakes. So to properly prepare, first, I want you to collect all financial documents needed to file your return. This includes documents from your employer, banks, lenders, brokerage firms, schools, health providers, and other people and businesses you do business with. Next, make sure you know the personal information for your spouse and your dependents if you have them. And if you own a business, be sure your bookkeeping is up to date and you have kept track of all necessary receipts. All right, the next thing I want you to avoid is missing a tax deduction or credit. In general, you want to take as many credits and deductions as you can. This allows you to pay the lowest amount of taxes possible. Tax credits like the earned income tax credit directly reduce the amount of taxes you owe, giving you a dollar for dollar reduction of your tax liability. So, for example, if you owe $200 in taxes, a tax credit of $200 will reduce the amount of taxes you owe by $100. And in this scenario, you would owe $0 in taxes. Now, some tax credits are even refundable and go towards your tax refund for the year. On the other hand, tax deductions, like the home office deduction, lower your taxable income. Now, how much you save in taxes due to the deduction will depend on your tax bracket. So, for example, if you're in the 10% tax bracket, a $1,000 deduction will reduce the amount of taxes you owe by $100, which is 10% of 100. Now, always check for tax credits and deductions that went unused in previous tax years. They can help you lower your tax liability for this year. If you haven't seen my video on 101 tax deductions and credits that will help you lower your tax liability, be sure to watch it after this video. Number 3 on the list is failing to report all income. Almost all income you receive is taxable. And if you have any form of income for the year, Uncle Sam wants to know about it. Now, you might be asking yourself, what is considered income? Well, the IRS wants you to know that taxable income includes more than your wage and your salary. Taxable income also includes fringe benefits, bonuses, tips, unearned income, unemployment income, investment income, royalty income, refund interest, self-employment income, bartering, and income from trading virtual currencies like Bitcoin. Number 4, missing the tax deadline. If you didn't know, the IRS has a gift for everyone who misses the tax deadline. And that gift is a financial penalty of 5% on the amount owed for every month your return is late, up to 25% of the amount due, plus a little interest. The IRS might even be nice enough to give you a late payment penalty as well. Now, I don't know about you, but that's a gift I don't want to receive. So to avoid the penalty, be sure to file your taxes and make payments by the tax deadline of April 18th for 2022. April 18th of 2022 is also the deadline to file a deadline extension if you won't be able to file your taxes on time. Number 5, not signing and dating the return. Forgetting to sign and date your tax return is one of those I can't believe it moments, but you'll be surprised how often it happens, especially for those who are married filing jointly, where one spouse forgets to sign the return. Unsigned and undated returns are rejected and are sent back to you for updating, which can cause a delay in processing. Next on the list, incorrect bank account information. When your bank account does not match the information on your return, your refund is sure to be delayed. Now, common mistakes include ownership of the bank account not matching with the filing status or name on the return, and mistakes in routing and account numbers. If this is the case, one of three things can happen to you. If the mistake does not pass the IRS validation criteria, you will be issued a paper check instead. If the mistake does pass the IRS validation criteria, but the bank rejects the refund, you will receive a paper check. Now, if the mistake is accepted by the bank, you may have to talk with your bank to get your money back. All right, next on the list, mailing your return. Simply mailing your return isn't necessarily a mistake, but it can lead to longer processing times by the IRS. If you're expecting a refund, I would suggest not filing by mail if you can help it. And that's because filing your return by mail is the fastest way to delay your refund, because mail takes more time to get to the IRS and paper returns take longer to process, including longer to catch any errors. All right, number 8, not hiring a tax expert if needed. If you have a very simple tax return, then you might be able to get away with filing your taxes yourself. But once your tax return becomes a little more complicated with business income and losses, rental property, itemized deductions, stocks, or advanced credits and deductions, it is in your best interest to hire a tax expert. Look, tax law changes constantly. Tax deductions and credits change constantly. And when and what to file also changes. So to avoid mistakes and headaches, I don't recommend trying to navigate the tax code yourself. If you found this video helpful, do me a favor, hit that like button for me. It helps others to find this video on YouTube, and subscribe to the channel for more information that helps you save on your taxes and build your wealth. I'm Quran from Life Accounting, and I'll see you in the next video.